I traded with one candlestick pattern for 3 months.
You serious?
With 2 forex pairs from the 1st of July to the 30th of September, and you'll be amazed with how the results turn out.
Let's go.
It's said that you can't just trade candlestick patterns alone, and you always need to pair them with a strategy or indicator. We're about to find out the truth whether that's very valid or not at the end of this video. Now, I didn't just enter the trade whenever I saw that candlestick pattern. I created some simple rules for myself, nothing too complicated and not too many tweaks.
We do not care.
Just rules to make me enter the market multiple times like I have little experience. So before I review that golden candlestick pattern, these are the rules I created. The 2 pairs I picked were GBPUSD and USDJPY. In both pairs, I chose the 4-hour time frame because candlestick patterns tend to have a strong influence in the higher time frames. The candlestick pattern was only treated as valid if it formed during the New York and the London session. If it formed outside of those sessions, then I wouldn't enter the trade. If another candlestick pattern formed while I was already in the trade, I would not make another entry and just wait on my open trade. The stop loss was placed right below or above the candlestick pattern depending on whether it was bullish or bearish, and the target profit was 2 times the risk. But if the stop loss was above 80 pips, I waited for the price to pull back immediately after the candlestick formation to a point where I can get my 80 pips stop loss. But if not, I did not enter the trade because 80 pips was the maximum stop loss I tolerated. If the price took too long to come to my preferred price point, then I would ignore the trade and wait for another opportunity. That was all for the rules. Now for the final review. The candlestick pattern I chose was the engulfing candle. I think many of you might have already guessed it because that's one powerful candlestick pattern in trading that holds much influence. Whenever this candlestick pattern formed and the rules were not broken, I entered the trade. Now let's dive into how the market reacted to this simple yet dangerous strategy. I'm going to be calculating the pips at the end of each month as I go through the trades so you get to know whether we are going broke or we are thinking of our next vacation. Let's start with the first pair.
Hey y'all, come look at this.
The GBPUSD. Starting from the 1st of July, I waited till the 3rd before I saw an engulfing candle. But this bearish engulfing candle started at 1 AM and closed at 5 AM, which was in the Tokyo session, so I had to wait for another engulfing candle. A bullish engulfing candle formed right after and closed in the opening of the London session and closing of the Tokyo session. I entered the trade right away, setting my stop loss below the engulfing candle, which was 44 pips, and my target profit of 2 times the risk, which equated to 88 pips. I was hit with my first loss right in the next 4-hour candle, and that's where I started asking myself, what was I doing trading only candlesticks? But the experiment had to go on. Another bullish engulfing candle was created on a Monday, 7th of July, and after entry, my stop loss of 46 pips was hit.
You're broke!
Making it 2 losses in a row. On Wednesday, 9th of July, the market created another engulfing candle, and so I entered and set up my stop loss of 40 pips and target profit of 80 pips and waited for my 3rd loss in a row. This time, however, the market decided to hit my target profit and rekindle my passion for this experiment.
It's payback time.
On the 14th of July, I got a bullish engulfing candle, but I didn't enter because it occurred in the Sydney session. On the 22nd of July, a bullish engulfing candle formed and closed at 9 AM, and I entered the trade with a stop loss of 32 pips and target profit of 64 pips. The market hit the target profit for the second time, and the faith in the experiment started to crawl back. On the 24th of July, I had another engulfing candle, which was a bearish one. I entered the trade with a stop loss of 50 pips and a target profit of 100 pips, and the market proceeded to drop and hit my target profit. On the 28th of July, a bullish engulfing candle was created, and I knew definitely after such consecutive wins, the market would take one out. I entered the trade and the market hit my 36 pips off stop loss.
It is what it is. It is what it is.
On the 30th of July, I entered another trade after an engulfing candle formed and price dropped to hit my target profit of 160 pips. So at the end of the first month, we had a total of 278 pips, which put a $500 account and a loss size of 0.06. The profit was $166.40 because of spreads, making the total $666.40.
Nice.
Not bad for trading with only one candlestick pattern. In the month of August, which was the second month right after my last trade in July, a massive engulfing candle formed on the 1st of August, and if I enter right away, my stop loss would be huge, so I had to wait for an immediate pullback to a level that could give me a stop loss of 80 pips before I entered the trade. Price pulled back and I made an entry at that exact point. I could get that 80 pips of stop loss. I entered the trade and the target profit of 166 pips was hit. Another engulfing candle formed on the 8th of August, but it wasn't valid according to my rules, so I didn't trade that. A few hours next to to it, I had a bullish engulfing candle of which I entered and my stop loss of 31 pips was hit. On the 18th of August, a bearish engulfing candle formed which ended up hitting my target profit of 64 pips, and the market decided to take that back with two losses on the 20th and 21st of August with a minus 43 and 34 pips respectively. A bullish engulfing candle formed during the last week of August, and that also took me out in early September with a minus 64 pips.
I don't like where this is going.
So for the month of August, the total pips was only 58 pips, making the total of July and August amount to 336 pips. That was not encouraging, but the month of September was a bit surprising. A bullish engulfing candle formed on the 3rd, and I made an entry with a stop loss of 80 pips and a target profit of 160 pips, and the market hit the target profit. On the 11th of September, another bullish engulfing candle formed of which I entered. The market hit my target profit of 120 pips, making it 2 wins in a row. A bearish engulfing candle formed on the 17th, and if I entered straight away, the stop loss would be huge, so I had to wait for an immediate pullback to a level for the 80 pip stop loss. The market came to that price point and I entered the trade. Price went down after entry to hit my target profit of 160 pips. Another engulfing candle formed on the 22nd, and that hit my stop loss of 48 pips, but another entry on 25th September made me recover 38 pips of that.
Got him!
With the last trade for the month taking 30 pips out of it too.
Come on now, dog. Come on, man.
So for the month of September, the total was 400 pips, and when added to the previous month, the grand total was 736 pips, which with the $500 account and a loss size of 0.06, that was $441.20 in profits. That was what GBPUSD was able to make out of me trading with just the engulfing candlestick on the 4-hour time frame for 3 months. Now, let's see how USDJPY responded to just trading with the engulfing candlestick pattern. On the 4th of July, I got my first trade in USDJPY, which ended up hitting my target profit of 58 pips. A bearish engulfing candle formed on the 9th, but that trade hit my stop loss of 54 pips. After several days of no trade in the USDJPY, a bullish engulfing candle formed on the 24th of July, hitting my target profit of 145 pips. Another bullish engulfing candle formed during the last week of July, and I had to wait for an immediate pullback to get a maximum of 80 pips stop loss. After price pulled back, I made an entry and my target profit of 160 pips was hit. So for the month of July, a total of 309 pips was made. In the second, which was August, my first trade hit a stop loss of 80 pips after entry, and on the 12th of August, a bearish engulfing candle gave me 112 pips of profit. The next trade for the month of August was on the 27th, which ended up hitting my stop loss of 80 pips on 2nd September.
Do me a favor, please. Get out of here. Get out of here, man. Shit, I'm saying.
Now in the month of September, I only got 3 trades, which none was profitable. For the month of August, the total pips was a minus 48, and for the month of September, the total pips was a minus 142, bringing the total of the 3 months to 167 pips. So for both GBPUSD and USDJPY, the pips amounted to 903 pips, but in actual money terms, GBPUSD returned $441.20 in profit, and USDJPY returned $66.80 in profit, making a total of $508, which is about 101.6% of profit gain.
Wow! Beautiful!
To be honest, I expected this experiment to go downhill, and the best case scenario was for the account to be down in a loss. That didn't hit the account that much. I was quite surprised it returned 101.6% of profit for something every trader is against. I don't know how this would perform in the long run, but my guess is it could be very bad for a while and very good for a while. The only problem is trading with just candlestick patterns is like going into a tag team wrestling match as one person. The odds are very much against you even if you're able to hit some of your opponents. But if you have a teammate to give you a fair ground, you have a good amount of chance of staying in the fight for long and potentially winning. That teammates in this case would be trading strategies such as support and resistance, supply and demand, or even indicators. Regardless of the profits, I would be on a 50-50 stance on whether you can rely just on candlestick patterns in the market or not. All depends on your risk appetite, and trading with just candlestick patterns pushes your risks higher. If you would want to trade just the way I did, I would advise that you choose only GBPUSD as the pair and get a separate account just for that with a small amount of money that you are willing to lose, and use a small lot size when opening trades. Anyway, the key takeaway from this video is that with the right blend of candlestick patterns and a suitable strategy, you'll be profitable in the trading world. With that said, do well to check out my free trading strategies video to find other strategies that may match your trading style. If you enjoyed this video and you would like to see such educative content in the future, don't forget to like and subscribe for more. Until then, happy trading and may the pips be in your favor.